Hold on to your hats, folks, because the Donald is at it again. Like a toddler throwing a tantrum in a toy store, Trump has slapped tariffs on steel and aluminum imports. These tariffs, which took effect on March 12, 2025, are like a tax on goods coming from other countries. Trump claims this will protect American jobs. However, many experts believe it will actually hurt American businesses and consumers. They argue that higher prices on imported materials will make American products more expensive and less competitive. This isn't Trump's first rodeo with tariffs. He imposed similar measures during his first term, sparking a trade war with China. The results were mixed, to say the least. While some American industries benefited, others were hit hard. The big question now is, will history repeat itself? Only time will tell, but one thing's for sure. Things are about to get interesting. The European Union, never one to back down from a fight, has vowed to retaliate. They've announced their own tariffs on a range of American goods worth a whopping $28 billion. These tariffs, set to kick in on April 1st, 2025, are strategically targeted to cause maximum political damage. First up, they're going after products from Republican strongholds. Think bourbon, motorcycles, and those fancy boats rich people like to buy. It's a classic case of hit 'em where it hurts. But the EU isn't stopping there. They've got a second wave of tariffs planned, potentially launching on April 13th. This time they're targeting a wider range of goods, including agricultural products like soybeans and poultry, as well as consumer goods like clothing and appliances. This tit-for-tat tariff battle has all the makings of a full-blown trade war. And as we learned from the last one, nobody wins in a trade war. Canada, typically known for its politeness and love of maple syrup, is also feeling far from amicable. They've slapped tariffs on over $20 billion worth of US imports, including steel, aluminum, tools, computers, and even sporting goods. Because nothing says we're not mad, just disappointed, like a tariff on hockey sticks. These new tariffs come on top of the 25% tariffs Canada imposed earlier in March. It seems our friendly neighbors to the north have finally reached their breaking point. Canada is the largest supplier of steel and aluminum to the US. These tariffs could disrupt supply chains and lead to higher prices for American consumers. So much for that whole America First thing, eh? Across the pond, the UK is taking a different approach. A new Prime Minister Keir Starmer, eager to secure a long-term trade deal with the US, has decided against retaliatory tariffs. It's a risky move, but only time will tell if it pays off. Australia is also playing it cool, choosing to protect its consumers from higher prices. They're hoping to resolve the dispute through dialogue and negotiation. It's a refreshingly mature response in a world increasingly dominated by tantrums and Twitter wars. Section 5, Asia holds its breath. Japan and China react. In Asia, Japan expressed disappointment at not being exempt from the tariffs. Japan, a key US ally, relies heavily on the US market for its exports. These tariffs could have a significant impact on the Japanese economy. China, on the other hand, was quick to condemn the tariffs, calling them a violation of WTO rules. They vowed to take firm measures to protect their interests, but haven't yet specified what those measures might be. Given their track record, though, it's safe to assume they won't go down without a fight. Section 6. Wall Street shrugs. Markets take a deep breath. Despite the global trade turmoil, US stock markets initially shrugged off the news of the tariffs. Driven by better-than-expected inflation data, stocks actually rose on March 12th, after several days of volatility. It seems investors are more concerned with the bigger economic picture than with Trump's latest antics. Asian markets, however, showed mixed reactions, with some gains and some declines. Uncertainty around US trade policy is causing jitters among investors, making it difficult to predict how markets will react in the long term. Section 7 Economists fret, is a recession on the horizon? While investors seem cautiously optimistic, economists are far more concerned. They worry that these tariffs, coupled with proposed government spending cuts, could push the US economy into a recession. The tariffs are expected to drive up prices for consumers while also hurting American businesses that rely on imported steel and aluminum. This could lead to job losses and slower economic growth. Adding fuel to the fire is the growing national debt, which some economists believe is a ticking time bomb. Section 8, buckle up. Drivers' car prices set to surge. One industry particularly worried about the tariffs is the auto industry. Steel and aluminum are essential components in car manufacturing, so higher prices for these materials will inevitably lead to higher car prices. To make matters worse, Trump has also been throwing up roadblocks to foreign investment in the US steel industry. He recently opposed Nippon Steel's proposed acquisition of US Steel, a move that would have increased competition and potentially lowered prices. Section 9, inflation. Nation prices are up, but is this the new normal? The timing of these tariffs couldn't be worse, as inflation is already a major concern. US consumer prices rose 0.2% in February, bringing the year-over-year increase to 2.8%. While this was actually better than expected, core inflation, which excludes volatile food and energy prices, also rose 0.2%, reaching 3.1% year-over-year. The Federal Reserve, tasked with keeping inflation in check, is closely monitoring the situation. They're expected to keep interest rates steady for now, but may need to raise rates in the future if inflation continues to rise. Adding to the economic anxiety is new research suggesting a link between high government debt and inflation. This research suggests that the US's ballooning national debt could lead to even higher prices for consumers in the future. So buckle up, America, because it looks like we're in for a bumpy ride. Between trade wars, rising inflation, and a mountain of debt, the economic future is looking increasingly uncertain. And if there's one thing we know about uncertainty, it's that it doesn't make for a very smooth ride.